March 2020. We are going to take a look what is going on in the market, stock market crash, and especially Dow Jones Industrial Average chart for last 10-15 years. Now let's take a look at last 1 month of the Dow Jones Industrial Average. So about February 12th, we are at 29,551, right? In matter of few days, look at February 25, we are at 27,000. February 28, we are at 25,000. March 9th, we are at 24,000. March 12th, we are at 21,000. Then it went up a little bit on March 13th to 223,000. And today, which is March 16, it went down another 3,000 points back to 2,000 points, 20,000 points. Now, that 20,000 points was when President Obama transferred the economy to President Trump. So we are back to where we started 3 years ago. In this segment, we are going to analyze the Dow Jones Industrial Average and find out what is going on with the stock market in 2020. So it's been a crazy ride. As you know, we started this journey end of 2009. Sometime in 2009, it was at 8,000. From there, it was a steady ride all the way for almost 12 years. And we reached a peak at 30,000, almost 30,000. Now, in between, the market went up or down a little bit, but some correction here and there. But we all knew it was coming because a prudent investor knows that market at some point, sometime is going to correct itself. We knew the corona was in China. If something is in China, China is the global supply chain of the world. So if something happens to China today, we must react. So we must pay attention, and as we pay attention, we also must react to it, but which most of us did not. So number one. Number two, if you think about it, that why, look at the curve, it's a beautiful curve. Now, one more thing. Think about 10-year Treasury. 10-year Treasury yield was falling every single day. And the yield was just falling. When 10-year Treasury yield is falling, that one of the indicator is that something is going on in the background. Either stocks are being sold, some people are moving into more safe investments. So they are trying to invest and push their money into Treasury for risk mitigation, for safety, things like that. So once you see that, you must react. Find out what's going on, because usually most of the big investors, big companies, they're actually the first ones to do all those things. Most of the small investors do not have a chance to react right away unless you are paying attention and you react very fast. So if you are paying attention, you also need to do your reaction very, very fast. But anyhow, so those are the two things, and once you find out, you must rebalance your portfolio as soon as possible. Move some of the stuff in Treasury or some other safe investments, because we knew this is all coming from 2009 all the way to 2020, 12 years run, and the Dow Jones from 8,000 to 30,000. Everybody knows at some point there will be a big crash. Something is going to happen. So it's safe to save your investments. Move some of the stuff into safe harbor, Treasury, municipal bonds, dividends, or cash, some cash, and things like that. Anyhow, so are we at the bottom? Maybe not. And let me show you why. 20,000 is not the bottom. I think it could go down as low as 15,000. My prediction, at least it'll go below 18,000. Some people are saying it'll go below 15,000. And why we say that? Because if you look back, look at the stock market, how it progressed in between, right? So from 2009 all the way it went up to pretty much steady growth to 30,000. But what happened before that? What happened before that is in 1998, we had the Dow Jones Industrial Average was 8,000. Now, slowly it grew, and then 2001, there was 9/11. It was back to 9,000. In 2003, it came back to 8,000 again. So from 1998 to 2001, how many years is that? 4 years, right? Sorry, from 1998 to 2003. That's almost like 5 years. In 5 years, stock market came back down exactly where it started. Now guess what? That was not the stop. In 2009, we had mortgage crisis. It came back down to 8,000 again when we had a financial, we call it MBS. MBS, not the Saudi Arabia MBS, which is today's problem, but MBS is the mortgage-backed securities. Now, thereon in 2015, it was at 18,000. So my prediction is it'll go under 18,000 at some point of time because of many reasons. Number one, coronavirus, China problem, corrections, economy at some point has to contract, the contraction. The recession is coming from the president, as I hear. So when you combine all those, it's very significant that the Dow Jones Industrial Average could go down as low as under 15,000. So is this the end? No, it's not. So, but do I know? Nobody knows what is going to happen tomorrow. But good news or bad news, we must react to our stock investment accordingly. Now, how long it takes to, once it's at the bottom, how long it takes? It takes several years. It doesn't go that fast. Yeah, it goes fast sometime, but it doesn't go that fast. Once it is down, it takes a while, another 2-3 years to go, at least go up to half of the level, what it lost. The other part, we always make a mistake or we miss, which is keep in mind if Dow Jones Industrial Average falls 10%, your loss is very likely is going to be more than 10%. Why? Because Dow Jones is an industrial average combination, weighted average of many stocks, 30 stocks, right? Now, for individual stocks, it goes down in between 15 to 25%, right? And when the market goes, so Dow Jones goes down by 10%, your individual stock is very likely go down by 15 to 25%. Now the other way, when your Dow Jones goes up 10%, your stock is very likely to bump up 15 to 25%. So same thing because of the weighted average. So that's something to keep it in mind. Especially when market goes down, do not think my stock is also going down 10%. No, it's not. And if you look at your portfolio, you know that when the stock market went down 10%, you lost probably about 20%. So that's a misconception. I think we should keep it in mind that you are losing almost double the value of what Dow Jones Industrial Average is losing. That's something we must do. Now, In bad times, there's also some good times. And I'm going to tell you there are some opportunities in this market. So I'm not going to recommend a buy or sell, but this is what my personal opinion about few stocks. The top stock I'm going to say is Boeing. Let's take a look at Boeing. Now, Boeing ticker symbol is BA. Today they are trading very low at 130 per share, but at some point of time, within 20 or 30 days, it was trading at almost 347 to $48. Also, Boeing pays dividend, which is about 6.3%. So there are two upside. One, buy low now. Wait about 1 to 2 years to double your investment, at least 30-40%, if not double, within a year. Plus, you get the dividend of 6%. So, I believe my view is that this is a good buy. Next would be Apple. Apple ticker symbol is AAPL. Apple has huge potential when this down market is over. So Apple pays about 1 to 2% of dividend plus. Once all these things are over within 6 months to a year, Apple will be back to over $300. Right now they are trading at $240. So I believe there are a lot of potential for Apple, and my view is that this should be a buy and hold stock and will bring us a lot of values. We can also take a look at some airline stock for long-term value. They're very cheap today and is going to go down more. So buy cheap and hold at least for 1 to 2 years. I believe you will get a lot out of it. That's all for today. Keep on investing, keep making money. Best until next.